Few people outside Australia have heard of Port Hedland, but this remote mining town in the Pilbara region is at the centre of one of the most important business stories of 2014, the sharp drop in iron ore prices.
Both BHP Billiton and FMG ship out of Port Hedland, and from a BHP Billiton perspective, we ship all of our volumes out of Port Hedland.
Australia's mining giants have spent billions of dollars in the past decade on mine, railway and port expansions to boost production of iron ore, the key ingredient in steel, all to cash in on surging Chinese demand. Demand for Australian iron ore has become an important lead indicator for the health of the Chinese and the wider Asian economy.
But just as iron ore supplies hit record levels, China's economy is cooling. Beijing is also tightening credit conditions across its commodity sector, prompting fears from analysts that iron ore prices could fall further. So did Australia's big miners miscalculate?
We've seen, around about 50 million tonnes of demand come on from China. At the same time, however, we've seen supply from Vale, FMG, Rio and ourselves come up by 150 million tonnes. So we've seen supply exceed demand, and that is going to depress prices and of course flatten out the cost curve.
BHP, Rio and Fortescue can make money at current prices, but smaller overseas producers are struggling.
These low prices are seeing a supply response, not in Australia, but in the high cost areas of China. Our understanding is Chinese domestic iron ore production now has probably been curtailed by upwards of 100 million tonnes per annum on a seaborne equivalent basis. Also some of the higher cost countries like Mexico, Iran, Malaysia, we're seeing cuts in production there too because their cost bases are much higher than Australia as well.
But even Australia's big miners are not immune from the downturn. Despite slashing billions of dollars in costs since 2012, when the mining investment boom slowed, ANZ Bank predicts a further 75,000 jobs may be lost. Companies are also changing their work practices.
It's very costly to have a fly-in, fly-out workforce. So what we are seeing is that the miners are trying to move as many of the positions as possible from the Pilbara back to Perth.
Rio was also trialling driverless trains, while all three big miners are squeezing suppliers. Investment in exploration and new projects have been cut. However, the three big miners say they're committed to existing expansion plans.
Now, we still see, primary steel production in China, getting up to the level of 1.1 billion tonnes in 2025.
The big question for the miners and the Australian economy is whether global iron ore demand will match supply, prompting prices to stabilise, or if Australia's 2 decades of reliable economic growth is coming to an end. Jamie Smyth, Financial Times, Port Hedland.